Hi guys, welcome back to the YouTube channel. Today I'm going to give you 3 recent tax changes that you need to know about as a property investor. But before we jump into the good stuff, do make sure you hit that subscribe button and that notification bell so you get notified as soon as we post brand new tax saving and wealth building videos. So the first one we're going to be talking about really is the big one. Hopefully you know about this, and it is corporation tax. So corporation tax is going up to a 25% headline rate, although in practice, and for a lot of people watching this channel, small to medium sized business owners, actually there's going to be a 26.5% top rate because of the marginal relief. Ultimately, you've still got a small profits threshold of £50,000, that's taxed at 19%, but all of these thresholds get divided by the number of associated companies that you have. We've got a separate video on the YouTube channel running through all the different kind of meaning of associated companies and all the bands. But ultimately, if you're investing in property using a limited company or just trading for a limited company, make sure you're mindful of this and doing what you can to reduce your corporate tax bill and planning ahead so you don't get a nasty surprise. The second one is filing a property CGT return when you sell it in your own name. So if you dispose of a residential property basically in your own name or as a married couple, you have 60 days to file a capital gains return and notify HMRC on this and also pay the capital gains tax due. This doesn't apply if you're trading for a limited company or if you're selling your main residence, but if you're selling a buy-to-let or an investment property, the chances are this will apply to you. So make sure you do this ahead of time, otherwise HMRC are known for giving pretty nasty penalties around this, so make sure you don't fall foul on this. The third and last is the 2% surcharge for non-residents buying property in the UK. So you've already got the 3% for second properties, a higher rate of additional dwelling surcharge. But from 2020 onwards, for the end of 2021, basically, if you're non-resident and also buying property in the UK, so a lot of people like myself, expats living out here in Dubai, but also buying UK property, if that company is basically controlled or the majority of the directors are non-residents, that company will have to pay this 2% surcharge. Unfortunately, there's not too many ways around this unless you've got unless you basically do what you need to do to make that company UK resident, looking at the criteria. But for most people, it can't be avoided, so you need to factor this into your investment equations. If you found this video useful, please do hit that subscribe and give it a big thumbs up. Otherwise, see you in the next one.